Hi, this is Michael Yardney and welcome to my regular property market update. It's all doom and gloom out there at the moment, isn't it? Like all good thrillers, whether they're movies or novels, we seem to keep waiting for the next twist, the next turn, and the next villain as our plot unfolds. And of course the newspapers and the media, they're having a field day. Shock, horror, worries, they sell newspapers and it glues viewers to the television, doesn't it? While it all started in the United States, share markets have fallen sharply around the world, having significant impact on the financial sectors and on real estate investment trusts. This has spread to cause economic downturns in the United States, in Britain, and in some European countries. Investors have become cautious, and some banks have gone into fear mode. They're focusing on risk and they're tightening their credit criteria. In Australia, the financial fallout came at a time when already consumer confidence was at its lowest. It's the lowest it's been since the recession of the early 90s, and it was made worse by 12 successive interest rate rises. So the common question I'm asked at the moment is, what does this mean for our property markets? Can it possibly end well? Well, my answer is yes. But it's not just me saying this. Most other Australian property commentators and property economists sees the strength in our underlying property fundamentals. Now, I don't want to minimise the damage being caused by the financial crisis. Of course it's going to affect all of us in some way. It almost certainly has already affected you. I know it's affected me. But this is nothing like the early 1990s recession. Remember Paul Keating's recession that we had to have? At that time, our economy and our banking system was hit hard. Interest rates were almost double our current rates. There was a huge oversupply of properties and property values plummeted. At the same time, migration almost dried up. In fact, it was about 50,000 people coming into Australia a year. Currently we have close to 200,000. And at that time, unemployment was at record highs. The experts tell us Australia's economy will be largely insulated from the downturn overseas, the problems that the United States, British and European economies are having. Our strengthening exports will help us, as will the partial recovery from the drought we've had for a while now. That's of course going to support further growth over the next year. Another bit of good news is that the interest rate cycle has turned, hasn't it? And rates are now falling. However, it seems that currently all the news is bad news, and the financial crisis is causing our property markets to overreact. Have we seen the end of it all yet? I don't know. All I know is that now is not the time to panic, as the fundamentals for our property markets still stack up very, very well. I've said this for the last couple of property updates, but please allow me to repeat it again. Our economy is basically sound. Sure, it's slowing down. But remember, before all these problems, the Reserve Bank wanted our economy to slow down. They wanted to curb inflation. Our interest rates are falling, and we can expect more cuts in the future. I keep reminding you that our population is increasing faster than ever before, and that we're just not building enough houses, so we now have a huge undersupply of dwellings. That's putting our vacancy rates at record lows, and our rents are rising. And this of course means that property investment yields are increasing. If we still keep looking at all the strong fundamentals, the cost of constructing new dwellings is only going to increase, and that's of course going to drag up the value of established properties, those that you own, that I own. See, it's easy to lose sight of all these positive factors considering all the troubles we keep hearing about. As I explained in previous reviews, my view of the property market can be summed up simply as follows. I've got really strong positive views of our property markets in our capital cities in the medium to long term. But of course, I'm certainly aware of the potential short-term problems related to the credit crisis and poor market sentiment. What this means though is that you should be looking at the right property at the right price in the right location with the right rental income. Because of course, as a long-term investor, and that's the only way to look at property as a long-term investor, you can buy properties at any stage of the cycle as long as they're the right properties and the fundamentals of your individual deal is sound. So this year may be a good time to buy property. I've always found a good time to buy is when everyone else tells you that property's a bad investment. Now's the time to get set for the future. I'm not waiting for the next boom to invest. I've already started now, and I'm going to be set when the next boom comes. I'm going to be one of those investors who pushes property markets up to the next level, creating the next boom. Of course, that's when everyone else is going to hop in and push the values of the properties that I've been buying, and many of our clients have been buying, and the savvy investors have been buying, building and renovating this year. They're going to be pushing them up to unthought of levels. As you know, the herd mentality is what makes people invest and what drives markets. People want to do what everyone else has been doing. They don't want to miss out. So last year and the year before, everyone, the herd, wanted to buy property. Clearly, this isn't the same now. The market has changed. Remember, markets such as stock markets and property markets, they always overcorrect. So our current low market sentiment for property is creating some great opportunities. Experienced investors know that the best time to buy is not when the market's hot, when buyers are out in droves competing for stock that's snapped up at alarming increasing prices. Rather, they wait and buy when the market slows down. By the way, have you checked out details of my annual Real World Real Estate Workshop? It's Australia's longest running 3-day advanced property workshop, and it comes with a proven 6-year pedigree of helping investors. If you're an experienced property investor or a well-read beginner, and particularly if you want to get started in property renovations and development, this is the year that you must attend. You see, we only hold this workshop once a year, and the event sells out. So click down below now to find out a bit more about our workshop. See, at this workshop, I'm not going to be able to predict the future, but we have a top lineup of experts, and they're going to be showing you advanced property strategies to take advantage of our current property markets, to protect your assets, and they're also going to show you how to get started in property renovations and property development. I've got the best faculty of trainers in Australia, and that's why my Real World Workshop is considered Australia's leading property training. We've got 2 property accountants there with you for the 3 days, 2 finance strategists, a property savvy solicitor, and I can't even say it, I'm so excited, a plethora of real world property experts there with you. And the workshop format will allow you plenty of time to speak to these experts about your own personal circumstances. So please click on the link below and check out the details of our workshop, because I'd like you to join me for 3 days in October at my Real World Real Estate Workshop. Have a great week. This is Michael Yardney.